There's incredible power in understanding zoning when it comes to real estate. It's one of the least talked about, most underrated, but most valuable research and data points that you need to understand and know about the market you're looking to invest in, whether it's local or out of state. I'm going to teach you the value of it through a client experience that I had today in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel because I'm uploading content on a daily basis to help you customize your blueprint for financial prosperity. So I had a client come in today. She's a returning client. She is a cook and she happens to specialize in Ethiopian cuisine. She does a wonderful job, by the way. She came in to me. She was looking to get a credit card because she is pretty deep into her working years and has not started the journey of building credit. But she's now pursuing opening her own restaurant to be able to take her talent and get the maximum return on it, which I salute. We were in conversation. I helped her get the credit card that she was looking for. Thankfully, she was approved. In the midst of conversation, she started to talk to me about how she's having a hard time finding a commercial place to start her restaurant. So we had an extensive conversation. We're talking more about it. She says this is the biggest holdup to her being able to part on her own. She's currently working for an existing restaurant and she's doing well for herself, but she wants to create her own business. She knows that she can be better by herself and bring a better product to the market and do better by herself financially than if she works for someone else with the skill set she has. So how does this plug in to understanding zoning when it comes to investing in real estate? Because the reality of it, though she's striving to become a business owner, she's also going to be in the game of real estate. So we're having this conversation and I get her to understand, as she's describing to me, that she's been working with a realtor and the properties she's been looking at are not in areas that she desires and they're still out of her price range. So I talked to her and I said, well, what area are you looking to ideally have your restaurant start? She explains the area. It wasn't far from where we were. And you can consider it the center of town where we were, kind of like right on the outskirts of the downtown area. Very nice area, very mixed, diverse area, and very touristy area. So it was a great landmark for her to set up her dream business. So I explained to her, I said, have you considered residential property in the area? And she said, no, I don't get it. The area that we're in, the city that we're in, has a ton of multi-unit residential real estate. And I mean 2 to 4 unit real estate. And it's very common to have mixed use on these different properties throughout the city. So what that means is that the property is allowed to be zoned for residential and commercial use. And because of the fact that it's configured 2 to 4 units, it allows people to be able to live out of a space and still run a totally separate business. Very popular for small restaurants, tattoo shops, massage parlors, spas. Very, very popular strategy. So I talked to her and I asked her, I said, this area that you're interested in has a ton of multifamily property. Have you considered buying one of those properties to start your restaurant? It's just you, it's gonna be a small space. And she wants to start largely with takeout. And so she doesn't really need a large setup for people to come in and dine. She needs a kitchen and she needs enough space to be able to prepare her food and then provide it for takeout services. So she's explaining to me how she's been on this hunt for commercial restaurants, commercial property, and it's so far out of her price range and pushing back her ambitions. So I open up her eyes to understand you actually can be, not only do you not have to start in another market or, another part of the city that you ideally don't want to be in, or your ideal clientele is not in, but you have an opportunity to actually do this right in the spot that you want and the most effective lending strategy when it comes to taking down property. So her ears perk up, of course. And I explained to her that, and we get on the website and I start to show her the local zoning laws and give her a breakdown based on the areas that she was interested in. And I introduced to her how many cases you have access to mixed use property. So if you're an independent contractor, a freelancer, or a small business owner that maybe need a certain space to work out of, you could have a multi-pronged benefit in understanding zoning without having to get into the complications or the expense of commercial real estate if you're not there yet. So I explained to her, listen, you're also looking for a permanent residence while you're looking to launch your business. You could take down one of these multifamily properties, possibly with an FHA loan, only needing 3.5% down. Still be able to use the property for residential and commercial use to run your business out of. You might have to do some light renovations, but think about the ability to be able to get into this property with minimal money down, amazing financing terms, possibly even the ability to renovate the property within the loan if you do a 203K loan with the FHA and roll that into the cost of the loan total. And the fact that you'll be able to pay your residential property off the commercial earnings from your restaurant. On top of the fact that you're going to likely receive some pretty impressive tax benefits, not only from being a residential homeowner, but from also running a commercial business in the same space. I'm not an accountant. The likelihood is there's going to be some impressive tax benefits from this. So I wanted to share this story with you guys relatively quickly because this is some of the little nuances that many people don't talk about. Many financial gurus, real estate gurus out there in investment clubs, they talk about all this glitz and glamour about getting into real estate. Many of you join these different clubs and associations and you find out it's a lot different than what's been laid out to you. What this is intended to do is to educate you to understand that just understanding little nuances like this can kickstart your real estate investing career or a hybrid of real estate investing and launching your business. The understanding zoning can make the difference in you pushing back your ambitions by years, or being able to not only get started sooner with your ambitions, whether it be real estate investing or starting a business or a combination of the two, but getting some amazing financial benefits in the process. We're talking about being able to not only, run your business and cash flow your business, but that money also being able to directly pay off that property, because clearly you're going to kind of be your own tenant in the sense of speaking. And you can do this through residential lending standards with a mixed use property in many cases. Just an eye opener. This is another one of those scenarios where I want to get you guys on, many of you who are not well off or may not have a ton of money to get started in what your goals may be. This is the little nuances and hacks that you need to be trying to look for to get yourself in the door sooner. Because as I always tell you on this channel, the greatest advocate towards financial success is time. The more time you put in, the more time you allow your business strategies, your investment strategies to work, the greater the return is going to be. As always, I appreciate y'all for tuning in. This is JP checking out. I want y'all to stay focused. You already know, stay in motion. I'll see y'all soon.